Understanding RSI Relative Strength Index. The RSI, or Relative Strength Index, was developed by J. Wells Wilder. It measures the speed and change of price movements and ranges between 0 and 100, traditionally. An RSI above 70 is considered overbought. Price may reverse down. An RSI below 30 is considered oversold. Price may reverse up. But RSI isn't just about overbought and oversold. It's also great at spotting momentum strength, divergence, and trend confirmation. Key RSI points default setting 14 period. Can be adjusted to 7 or 21 depending on strategy. Values between 50 to 60 in an uptrend and 40 to 50 in a downtrend often act as dynamic support, resistance. RSI can act like a laser pointing at exhaustion. But remember, RSI can remain overbought or oversold for a long time in a trending market. That's why we pair it with MACD. Understanding MACD moving average convergence divergence. MACD was developed by Gerald Apple. It's a trend-following indicator made up of 3 components: MACD line usually 12 EMA, 26 EMA, signal line 9 EMA of MACD line. Histogram: the difference between MACD and signal line. When the MACD line crosses above the signal line equals bullish signal. When the MACD line crosses below the signal line equals bearish signal. MACD is brilliant for confirming trends, spotting momentum shifts, catching early reversals, avoiding sideways market traps. The histogram visually shows momentum. Rising bars suggest increasing strength, shrinking bars signal weakening trend. Why combine RSI and MACD? RSI and MACD are from 2 different indicator families. RSI equals oscillator momentum. MACD equals trend plus momentum. Combining them reduces false signals. For example, RSI may show oversold, but MACD is still bearish. Wait. MACD gives a bullish crossover, and RSI is below 30, a potential strong reversal. MACD histogram rising plus RSI crossing above 50. Ideal entry confirmation. This dual check system helps you avoid bad entries and trade with higher accuracy. RSI plus MACD combo strategy rules. Let's now define the exact rules for this strategy. By setup rules: 1. MACD line crosses above signal line. 2. RSI crosses above 50.3. Price is above 200 EMA optional filter. 4. Enter on candle close. 5. Set stop loss below recent swing low. 6. Set take profit at 1.5x to 2x risk or near resistance. Sell setup rules. 1. MACD line crosses below signal line. 2. RSI crosses below 50. 3. Price is below 200 EMA. 4. Enter on candle close. 5. Set stop loss above recent swing high. 6. Take profit 1.5x to x reward or near support. Always wait for both indicators to align before entering. Chart setup, time frames, and indicator settings. Recommended chart setup: platform, trading view, MT4, MT5, time frame 15-minute, 1 hour, best for day trading. Indicators: RSI 14 period, MACD 12, 26, 9. Optional: 200 EMA for trend filter. Use candles or Heiken Ashi for better visual trend. Entry, exit, stop loss, and take profit rules. Let's go over this in practical terms. Entry: candle must close with both MACD and RSI confirming. Enter on next candle open. Stop loss: use recent swing high, low, or fixed pip SL 2230 pips for Forex. Take profit: set TP at 1-2 to risk, reward. Or exit when RSI hits 70 overbought or 30 oversold. Or when MACD shows divergence, you can also use trailing stop after 1 to 1 R reach. Filtering false signals. Avoid signals in sideways, range-bound markets during low-volume hours when MACD and RSI diverge. When not to trade this strategy, don't use during news events and FOMC. In Asian session for Forex. On low time frames like 1 min to noisy without stop loss. No strategy is 100%, it's all about risk control. Bonus tip, add support, resistance, use RSI plus MACD combo along with support and resistance zones. RSI breakout near support with MACD bullish equals strong buy. RSI rejection at resistance plus MACD bearish equals high probability sell.